Hey guys, Joseph Henson here with Henson CPA Group. I hope you guys have had a good week. It's been pretty cold here in Missouri. Snow's finally going away. Kiddos went back to school. But this week, we want to kind of talk about what you can do to help streamline year-end reporting. So we're talking about monthly close made simple, how to keep your clinic's books in check all year. Again, I'm Joseph Henson, CPA with Henson CPA Group. I appreciate you guys being here, and I appreciate the questions I get on a weekly basis. So why does a monthly close matter? This will help avoid end of year chaos by reviewing books every month. It will help you catch errors early before they start to snowball. If you are reviewing your numbers and notice that at some point you had a 30% spike in payroll without hiring someone, that could be indicative of a lot of issues. If you notice that your cost of goods have dropped tremendously, well, now we might have another issue if you weren't intentionally trying to reduce that. It will provide real-time visibility into your profitability, your cash flow, and your operational efficiency. Key steps in a monthly close. The first step you always have is to categorize all uncoded transactions, whether you're using QuickBooks Online, QuickBooks Desktop, Xero, Sage, Wave, whatever software you are using. You want to make sure there are no uncleared transactions. After that, you are going to reconcile your bank and credit card accounts. You want to perform a reconciliation to make sure you know what your true ending cash balance is. And for your credit cards, what your payable is going to be. You also want to verify your AR, your accounts receivable, and your AP, accounts payable. How do you do this? With receivable, if you're using Shepherd, if you're using Avamark, if you're using Covetrus, EasyVet, whatever your practice management software is, pull a receivable report as of month end. So we're in January. You want to pull it as of 1/31/2026. This will allow you to make sure you have captured all of the outstanding revenue you earned, but maybe you haven't received. And with payables, what this is really is going to be twofold. The easiest is when you receive a bill, but it's not due for 30 days, putting it into QuickBooks, Sage, whatever you're using, and having the due date be in there. The other one, which can be a little more complicated and most clinics don't have to worry about, is payroll from month to month. If you are on a 2-week payroll and you're going to have a week in there or a few days of payroll, technically you have a payable on your books, even if you're not going to do that way. This also will let you review any payroll issues that come up, loan payments, because your loan balance as of month end should tie to the statement and you're capturing the interest expense throughout the year, not just that year end when you come to me for tax prep and we're not handling your books. We have to do a reclass. So it throws off your numbers for the entire year and any recurring expenses. Do you do recurring monthly draws? Do you have rent that's due every month? What is it that is a recurring expense that should be there, but maybe isn't? Common mistakes you can avoid. Skipping a reconciliation or waiting too long. You do not want to skip reconciliations. You don't want to wait and only reconcile one time a year. If you do a reconciliation every month and you have a reconciliation discrepancy, we have an issue. There should not be a reconciliation discrepancy. You should be digging in to make sure what you have in there is correct. Another common mistake that you want to avoid is misclassifying expenses, which will inflate or deflate your profit and loss. Your KPIs, which we recently talked about, your key performance indicators, are driven off of the data. If you have garbage data going in when we calculate the KPIs, it's going to be garbage coming out. You want to have these in as accurate of a spot as possible. And then ignoring unbilled revenue or overdue invoices. If you have unbilled revenue, get that billed. If you have overdue invoices where people owe you money, the farther along you are from when that was performed, the less likely you are to actually collect on that invoice. So let's get those hammered out every 7 days. You're sending a reminder. You're not seeing them again until they are caught up. Then letting inventory adjustments pile up. A lot of spoilage, a lot of shrinkage can happen, but we need to be careful of that, and especially in a veterinary clinic. Not having a month-end inventory count can be harmful. We're going to have a huge adjustment, and honestly, you might have some liability there if it's a controlled substance. Organizing your close process. Set a consistent monthly schedule. On day 1, we do this. On day 2, this. On day 5, this. And by day 10, all this is handled. You want to have this so you know what to expect, and it will allow you to assign tasks to staff with clear responsibility. On day 1, we are taking inventory when we first get there to make sure we know what is in there. On day 2, we are making sure someone is categorizing all of our transactions for the last week, because every week we're doing this, but we want to get all those so we can begin day 3 and 4 reconciling our asset accounts and liability accounts. Use checklists to track completion between reconciliations, categorizations, and reporting, because none of this does any good if you don't utilize it with reports. Looking at your financial statements on a monthly basis. What are financial statements? Again, balance sheet, income statement, statement of cash flows. Consistency will reduce stress and errors long term. Benefits of a monthly close. Accurate financial statements at all times. I have a lot of clients who want to end up in the next 3 to 5 years selling their clinic. When they do that, folks want 2 to 3 years of financial statements and tax returns to judge how your clinic is doing against a long-term model. If your numbers are garbage, you will hurt your valuation. That is one of the biggest things you have to be aware of. Early identification of cash flow issues. If you're noticing you have less and less cash every month on your statement of cash flows due to operating activities or due to debt payments, we have an issue, and we want to identify that early to correct it. Maybe that means you're working a little extra, you have a doctor who's working a little extra, you're cutting hours here or there if you need to, but we want to see what we can do to allow you to catch the cash flow issues before they snowball. Better insight into staffing, supplies, and equipment decisions. If you have monthly counts on all of your assets, on all of your liabilities, on your payroll expense, you will be able to accurately calculate your KPIs to say how well you're doing. If you feel you need another piece of equipment, what is your cash flow? Can you truly afford a $1,500 a month payment for a new high-tech ultrasound and ultrasound probe? Maybe, but without your cash flow, you don't know. This will also help with smoother tax planning and preparations. A number of times I have new clients come to me in October, November, December saying, hey, I want to see if we can save money on taxes this year. Makes it hard when you haven't done any of your financials for this year. I can't just plug your numbers in and say, do this. I have to now figure out if I need to rebuild what you have. We can't just take your word for it if you haven't been reconciling, if you don't know your categorization is correct. So having all this done monthly allows someone like me and my team to come in and actually help with the tax planning and preparation much more timely. What are some tools you can use to make it easier? Your accounting software. I mentioned QuickBooks, Xero, Sage. Those are the big ones, whether it's QuickBooks Online or QuickBooks Desktop. Most are going away from desktop for one reason or another, just because of the fact that most veterinarians don't need it. A lot of industries still do, especially manufacturing, but not veterinarians. QuickBooks Online is great. Xero is another very well-known one that I've started to do more and more reviews on. Bank feeds and automations for recurring transactions. Your accounting software should pull in bank transactions on a daily basis. If you're not, and you're using something like QuickBooks Desktop but not using the bank feed, you need to have recurring transactions set up for anything that is a recurring payment. Then reporting dashboards for P&L and cash flow and balance sheet. These are the 3 big financial drivers in your business. Without utilizing these, you can make all the money in the world. If you don't know what your numbers are doing, they don't do any good. Alerts for discrepancies or unusual transactions. in your clinic, in your practice, you can have it so that if there's something over $750, you have to be alerted. And these are one of the things you can review on a monthly basis. Hey, if it's over $750 and it's not our suppliers for medications, pet food, yada, 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 I need to know. I need an alert built for this. So here is a monthly close workflow, kind of like I mentioned. Step one, you reconcile your accounts. This will let you know if you're missing categorized transactions. So you can then go and categorize those, find the bills, find the invoices to get that fixed. Step three will be review your accounts receivable and accounts payable to make sure there's nothing that has been missed and that your receivable aging isn't huge. Step four, check for payroll and loans that might still be outstanding. Do you have a payroll check you wrote? Hasn't been cashed? Do you have any loans that need to be trued up or that you're not seeing the interest for on your P&L and we need to reclass that interest to properly reflect it? And then generate your profit and loss and balance sheet and review that with your accountant. If that's me, we jump on a call, we review it with you. Some tips for maintaining momentum. Schedule your monthly close like a recurring appointment. Just put it on your schedule, take some extra time, a couple hours, but make it a recurring appointment. Keep a short task list each month rather than trying to do everything at once. Every week on Monday, I come in, I categorize any transactions for the prior week. Every week on Wednesday, I start to look and make sure my AR is accurate and that we're billing out for statements and invoices that haven't been collected. Track your small wins. Seeing clean books will build confidence in your clinic. We want to track that. When you see that there's no reconciliation discrepancies, when you see that month to month you're on a consistent trajectory, it will make you feel better. Then review trends from prior months to guide decisions. If you're utilizing a rolling 12 months and you know the winter months are your slow months, or I apologize, you know that summer months are going to be a little bit of an uptick with anxiety medication for dogs because of the 4th of July, you can review these and it will help you guide your decisions on what inventory to have on hand, how much you need to have your clinic staffed, stuff of that nature. If you'd like help setting up a monthly close system or reviewing your clinic's financials, we are here to guide you. Again, I'm Joseph Henson, CPA with Henson CPA Group. My email is on the screen, Joseph with 2 E's at hensoncpagroup.com. You can check out our website, hensoncpagroup.com. And there is a booking link in the comments of this video. Please reach out. I love talking with you guys. If you have any questions, great. If not, I will talk to you all soon. Have a